Let's get to our street fight now, David. We've got a bull and a bear. Outright bull, outright bear. Bill Stone, PNC Wealth Management Chief Investment Strategist, is our bull. And for the bears, we have Lance Roberts, Street Talk Advisor CEO. Lance is already cracking up, Bill. He's like, I'm taking on this guy big time. So let me get your perspective first, Bill. You're an optimist, and you believe that earnings will not be as bad as everybody is anticipating?
Yeah, I think we have set it at a relatively low bar. I think really consensus is that we snap our 11-quarter streak of year-over-year gains in earnings. Yes, the economy didn't do great. I'm speaking of the global economy here in the third quarter, but I think it did well enough to kind of beat that low bar.
Well, Lance, let me read to you the Market Watch, one of the headlines today. It says, brace for the worst earnings season since the recession rebound. So, again, as Mark was talking about expectations, they're pretty damn low right now.
Well, exactly. And, of course, the one thing that I was laughing earlier simply because I'm not really all that bearish. I'm just a little more concerned about some of the global macro issues that are standing out there, such as a resurgence of the euro crisis, of course, the fiscal cliff coming right around the corner. And for our clients and for investors that are watching the show right now, it's not really whether or not the market rallies to 1,500 that's the problem. That's a very real possibility. The problem is if something along the way comes, trips this market up, and we lose 10 to 15%.
Like what?
That's what hurts investors.
Like what?
Well,
give us an example.
Like exactly. We get into another debt ceiling debate type structure over the fiscal cliff by the end of the year. We get into another. Look, the euro crisis has not been solved by one stretch of the imagination. Spain is not going to request a bailout until the last possible minute. And now today, the ECB just announced that they are fully engaged, ready to roll. Spain is required to pay 3.6 billion euros into the bailout fund that's supposed to bail it out. Where's it getting the money from? So those are real issues that are potentially right here, right now, we're going to have to deal with in the next couple of months.
And Bill, tell us something we don't know, though. That's the thing, Lance. I mean, I feel like, we know that. But, Bill, it proves that the last time we hit that debt ceiling and all the worry and the Sturm and Drang that was swirling around there ended up being a buying opportunity.
Yeah, no doubt. I think even last time we hit the debt ceiling, it got worse than I possibly imagined, given that you really looked at the facts and knew we weren't going to default on our debt.
Right.
So certainly it goes to that point of, could we get some more volatility? In fact, I have no doubt we will. I think you've got to focus in on companies that can make it through any sort of volatility we get. But I think net, that leaves me still bullish, though, on earnings.
Well, Bill, let me focus on one company that we started this session with. What about Apple? We see it dropping. I think it's now at the end of the trading day, it was about $6.38 a share. Is it a buy, or should I be dumping my Apple stocks right now?
Well, I can say we own Apple, so we still like it at this moment. I think the one thing you can come back to.
But why has it lost 10% since it's high?
Well, I mean, I think, when we talked about earlier, there's some worries about Fox, and certainly because it has been a phenomenally good performer, so it's going to have some profit taking at times. I think one thing you get down to is it still makes products that people want to buy, so we still feel good about it.
Yeah, it's like the Janet Jackson song, What Have You Done For Me Lately? I mean, they lost all of the bounce from the iPhone 5. Maybe they'll come out with something else like the mini iPad. The last time you were here, Bill, you picked Home Depot. It's up 22% since you did that. What else do you like out there? And I'm assuming that you still like HD.
We do still like Home Depot. I think, the story, obviously the valuation has gotten not as good, but the story in a lot of respects, it's gotten better. I think there's more proof that housing has turned, household balance sheets, all that. I do think you mentioned it earlier, technology was a rough sector today. We like Google, so, another one on top of Apple certainly had a rougher day today, but think about it in terms of longer term trends. So really monetizing the whole cell phone, being able to buy things on your cell phone, that whole mobility, I think Google's right there to take advantage of it.
Lance, let me focus on the earnings that are coming, specifically Alcoa, which is always seen as a bellwether for the world economy. And as people are concerned about what's happening in Europe, the slowdown in China, has all the bad news been cooked into Alcoa? We've got a tiny bump today.
Yeah, maybe we're getting close. I'll tell you, the big concern, though, is really what's happening in China and whether or not that comes back. I mean, look at the recent pre-announcements that we got from Caterpillar as well. the global economy really is a lot weaker than even a lot of our indexes here are telling us yet. So that is a potential downside risk to some of the earnings, particularly to more of your material-driven companies like Alcoa, Freeport-McMoran, et cetera. One area I do like now because of a big correction that we've had in oil prices really over the last couple of months is oil. Energy-related stocks, particularly drillers, are trading at good, deep discounts right now, and particularly like the Master Limited Partnership space, MLPs. They pay a nice dividend, and you can pick up some capital appreciation. If QE3 kicks in, we're going to see oil prices significantly higher, and that's going to play well.
Good to see you both.